The reason today's move in the market wasn't shouldn't have been viewed as a reversal. One of the questions should be, how do you know when the markets are reversing versus just an up day in a down market? The first indication was that the NASDAQ opened higher and then started selling off, which meant once they opened it, there wasn't any buying going on. The S&P 500 and the Dow, because each individual position opens up separately, that usually means that indicator, that index, will start off low, and as each one opens up, adds to the price. We saw how the price or the Dow moved up about 120 points right on the very few first minutes of trading today. So how could we tell that that wasn't a reversal in this market and they were taking it up much higher? Well, number one, we had the NASDAQ opening and not showing any strength. Number two, a very simple rule in candlestick analysis is you need to see a candlestick signal and a close above the T line. Well, as we saw today, it came up, the Dow came up, tested the T line a couple times, and failed by the end of the day. Thirdly, we were still heading in a downward direction in the stochastics. So that told us we probably hadn't hit bottom yet. So we had those three factors where we could see there was weakness in the NASDAQ, the Dow couldn't get through the T line, and their stochastics were heading down. That's the type of thing that allows an investor to be not as anxious. At least they can wait to see until those indicators have changed. That assessment of the markets also allows you to kind of be a little bit more patient for something. Let's say you had shorted Apple. Apple had a very nice short situation. Notice all the dojis right here on the 50-day moving average. We finally ended up with a doji followed by a bearish engulfing signal, creating what we call the left-right combo, which is a very strong, in this case, bearish signal. Then it gapped down, but today it gapped up substantially, but we could see right away on a candlestick signal that they started selling it off. So we were already starting to create another dark candle, whereas other charting techniques wouldn't have been able to see that as well. So this allows investors that if they're short and they see a pop-up in the market to be a little bit more cautious about reversing the position or closing out their short position until all factors are in place. And in this case, we saw there was weakness for the rest of the day in most of the tradings. And that same scenario occurred in our recommendation to go short Silver Wheaton, SLW. It popped open today, but note how that as soon as it opened, it started trading down. So our analysis had to be that after seeing a strong downtrend, trading below the T line, stochastics still heading down, that when they open positive, until everything is in place where the stochastics have gotten into the oversold area, that we want to wait to see what the trend is going to do, because the trend is usually going to show more resiliency than just the individual daily stock price. That'll be it. We'll see you in the chat rooms.